ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 12th day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just want to have access to the chat box. We also stream live during the broadcast on our YouTube channel, which is youtube.com/CFRN. We archive every daily show there as well, so any day you miss the show, just go to the YouTube channel and there you'll find it, usually a couple hours after the broadcast ends. And if you happen to be listening to this broadcast after the fact on your podcast player, be it iTunes or Spotify or iHeartRadio, wherever pods are cast, if you want to enjoy the video as well as the audio, hit pause on your podcast player and just point the browser to youtube.com/CFRN, and there you'll have access to both audio and video. Let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. We thank you for every person who has gathered here today for this broadcast and for those who will encounter this broadcast after the fact. We thank you, God, that you know each of us by name, that you have caused us to walk with you. We say that we are dependent on you, and our trust is in you completely. We surrender ourselves to you and ask that you would come by your Holy Spirit and inspire our hearts, our thoughts, our words, and our actions today. We pray that you would fill our lives with your love, fill our conversations with your grace and truth, and we pray that you would fill this meeting with your presence. We ask this in Jesus' name. Amen.
Amen.
All right. Happy Friday, guys. Let's take a look at the numbers from around the world. We have begun to roll the indices to the M contract, and Michael will go over that and explain that to you here in just a moment when he takes the screen. Currently in the U.S., the Dow is up 139 points. The NASDAQ is down 145. That's a little over 1%. S&P 500 is down 11. Russell 2000 is up 3.5. So we've got some division in the ranks. The Dow being strongly in the green. S&P about the same amount in the red, pretty close, but they are on opposite sides of the street. And anytime we see the Dow and the S&P divided that way, we know things are not in sync, as we call it. And so that can make trading difficult, and we will typically wait for those two to come into agreement to give us the best trading opportunities. In the commodity basket, crude oil up 4 cents, trading 66.06 last. Gold down $6, trading 17.1660 last. Silver down 39 cents, trading 25.7579 last. That's a drop of 1.5%. A reminder that when silver moves $1 in price, if you're holding the large silver contract, that's a profit or loss of $5,000. In the Asian markets at the close, Nikkei posted a gain of 506 points. That's 1.75%. The Shanghai added 16, but the Hang Seng lost 645. That's a drop of a little over 2%. In the European markets at the close, FTSE gained 24, DAX dropped 67, and the CAC climbed 12. A lot of light trading in the European markets so far this week. Well, for the European markets, the week's basically over. Now, that does give us a mixed day in Asia, a mixed day in the UK, and as I just explained, it is a mixed Radio Friday here in the US of A. So with that, we'll go to Michael now and get a recap of everything that happened this morning in the live training room. He'll explain rollover day to you. And then when I come back, we'll go over the concierge trade alerts from last night. No logic alerts for the most part today and last night, simply because of the market conditions. We only post alerts when we see what we feel are high probability, low risk trade opportunities. And for a number of reasons that I'll explain when I come back, we just haven't seen markets that were really conducive for trading based off of the larger time frame that we use for the alerts. So with that, Michael, it's all yours. I can see your charts, and I'll hit mute on my end, and it's all yours.
Okay, great. Here we go. All right, good afternoon, everyone. Happy Friday. Today, as I said, it's Friday, and it's the 12th day of March, 2021. If you have not taken a free trial with us and you're ready to take one, go to the homepage at cfrn.net. And if you're ready to take one, now's the time, because you can get ready over the weekend and be ready to go on Monday, all right, or Sunday night when markets open up. Go to the homepage at cfrn.net, scroll down to where it says free 5-day trial, no credit card required. Click on that. It's going to bring you to eminitrainingschool.com. On this page, all we need you to do is put in your name, your email, your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. And you must click on that confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. Now, trading. Okay, we're going to look at the spreadsheet. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Yeah, trading was kind of off today, but I'll get into all the individual trades in just a minute. But the results of the trades. Today, as I said, is the 12th day of March, 2021. We lost 8 ticks in crude, made 33 ticks in gold, and 27 ticks on the ES. Put us at plus 587.5 on the morning session. Today it took 7 minutes and 2 trades to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 21 trades. On the month now, we're at $11,320. That's over 10 trading days, averaging $1,132 per contract per 2-hour trading day. On the year, we've made 47 out of 48 days we've gotten our goal. And so far we're at $42,805. That's over 48 trading days, averaging $891 per contract per 2-hour trading day. Okay, so let's get into it. We'll start out with the gold. We didn't have to roll gold. Gold is in the J contract. Okay, well, let me just go over all the roll-in stuff first. Okay. Every third month, do it that way, every third month is when we roll. Okay, now the new contract becomes available on the second Thursday of every third month. So for the indices, that is this month, and for pretty much anything with a 6 in it, like the 6Y, the 6B, the 6J, the 6E, any one of those. Now what we look for, you see this is the Dow and this is the M contract. That is the new contract. If we look at the Dow, if we look at the Dow on the contract that we were trading yesterday, that would be the H contract. You see right there, new contract, old contract. Now you switch to the new contract when the total volume of the new contract exceeds the old contract. Okay. So like for the ES right now, where's the ES? Here it is right here. On the ES, you see right here, when it turns yellow, that means that the H contract is expired. The new contract is available. So for the euro, you just put that, do 6E, 6E. And when I do that over here, if I do 6E, it's going to bring up all of these different things. We're going to choose 6EM. Okay. And we'll say okay. And that's going to put 6EM right here. Now, if you look at the volume on the 6EM far exceeds the 6EH. So you would want to be on the 6EM contract right now, not the 6EH. To get these out of here, you just click on the contract and you hit the red button. That will delete the old one. Okay. So right now we're not rolling things like crude oil. You see crude is on the J contract. Crude does not roll every 3 months. Okay, it's a little bit different. All right, so that is what we rolled. Now let's get into what we did do here in gold today. All right, now the markets were kind of, well, I don't know, they're kind of a little off today. We started out with 1 tick on the first trade. We missed the second trade, which would have been a nice one. We picked up 10 ticks on the third trade. I believe that's where we got our goal for the day. We missed the fourth trade. We stopped out. Well, we missed the fourth opportunity. But we stopped out on the next trade that we took here. We lost 8 ticks on that one. Then we picked it all back up here. So after we lost 8 ticks, we were at +3. Then we picked up 11 ticks here to put us at +14. Then we stopped out again right here. Oops, wait. Is that right? Yeah, we stopped out again right there to put us down to +6. And then we stopped out again to put us down to -2. And then we had a break even there. Then we picked up 5 ticks here to put us at +3. Then a couple there to put us at +5. We missed a trade there. We missed a trade there. We picked up our +5. We picked up 5 more to put us at +10. Then a couple more to put us at +12. Then we got comfortably into the green over here. From +12, we picked up 11 to put us at +23. 1 more to put us at +24. Then over here, 9 more to put us at +33. I missed a trade there. I missed a trade there. We had a break-even trade there. Now, in all this movement here, I was highlighting all the levels where I thought price was going to go. And, you know, I highlight these levels. The beginning of the line is where I set it. And, you know, where it actually hits the line is where it did get to that level. You can see I was looking at all these levels. I was looking at pullback levels and target levels on these things. Like this was originally a pullback level. And then all this stuff turned around. We started getting target levels on the other side. So this was the level that it was showing then that it was probably going to get up to, but it took a while. It went through all this drop in here before it finally did. There was actually a shorting opportunity right here. Now this was during the break, but there was a shorting opportunity right there. And that would have been profitable. And then there was, well, they got up to that level in here, but there was no trade set up to get it there. Then in here, there was another long there, and a short right there. That would have been nice and profitable, and then it got really choppy. And that's kind of the way that it's been today. It's been a lot choppy. Now, crude oil this morning was showing early on what it wanted to do. Let me scroll back here. Okay. So we started out here with crude. Our first trade on crude was to stop out. We're minus 8 ticks. It stopped us out to the tick, and right there it was showing that it wanted to get up to 66 even. Okay. Now I set it, but then it started going down. It started going against the direction, the overall direction that I thought it really wanted to go in. But it started showing everything on the downside, and I was highlighting areas that I thought it was going to get down to, as I saw them. And it got down to all those areas, but we had one trade set up here I got to break even on. And then we didn't get any more trade setups on the way down. There might have been one right here for a tick to get to that level. There was one over here we took a break even. Once it turned around and started going up, and this was my, 66 even is where I thought it was going to get to. And I was thinking that way back in the beginning, way over here. I said it's going to try to get up to 66 even. And I don't know why I don't have a line there, because it was way back here that I was thinking of that. And it finally did get there to 66 even over here. But once it got to 66 even, I saw this number up here, the 6610 number. And it ran up there and got that one to the tick. And and then during the break, well, that was during the break. We got a break even trade here, and that was during the break. And then it got really choppy in there. And it's starting to set up a shorting opportunity right now. On the downside right now, crude does want to go down, and it wants to go down to 65.90. 65.90. Okay. And that was it for crude today. Now it doesn't have a trade set up yet. It's getting it. It's not quite there. Now the ES, the volume split between the old contract and the new contract on the ES. So I figured the ES was going to be kind of hard to trade today, but it wasn't too bad. We started out here with the ES on this trade right here. We picked up 8 ticks on that one. Then we had a bunch of chop in here, nothing really good to trade. We picked up 8 ticks on that one to put us at plus 16. We missed a short there that would have been profitable. We had a break even right there. Then it just did this whip back and forth in here. There was some spot in here where it just moved around really quick for no reason at all. And then it made a big whip one way and came back. It started to show on the other side, but it didn't actually give a trade setup until way over here. We picked up 1 tick on that one. And then here we picked up, looks like 8 ticks to get up to 25 and 2 more here to get up to 27. And you can see I was looking at levels up here and down here, way back over here. Okay, and this level here I was looking at back here. And this level on the downside, which ended up being hit way over there. I was looking at way over here. So if I give these levels out during the morning session, I try to remind you of them as they come along. And a lot of times you'll hear me say, they would just hit that level I mentioned a little while ago. It'll be something like this that I mentioned, this is 10:36 and it didn't hit it for 20 minutes. So you'll have, if you listen to all the words that I say during this right here, you've totally forgotten about this level over here. That's why I started drawing them, so I can go back and reference them later. But anyway, so we picked up a couple ticks there that put us at plus 27, and that was all the trading that we did on the ES. Well, we had one more here that I didn't log. Looks like we picked up a tick or 2. And it got really choppy in here. Glad I wasn't part of that. All right, and that was it. That was it for the ES this morning. Okay. All right, so let's go back here to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom today. And today is the 12th day of March 2021. We lost 8 ticks in crude, made 33 ticks in gold, and 27 ticks on the ES. Put us at plus 587.5 on the morning session. Today it took 7 minutes and 2 trades to get to the goal for the day. At that point, we're up $110 a contract and we took a total of 21 trades. So on the month now, we're up $11,320. That's over 10 trading days, averaging $1,132 per contract per 2-hour trading day. On the year now, we're at $42,805. That's over 48 trading days, averaging $891 per contract per 2-hour trading day. Rose, it says you have your hand up, but I don't see any question from you. All right, so hang on a sec, I'm scrolling through this. All right, so if you have not taken a free trial with us and you want to, go to the homepage at cfrn.net. Right here it says free 5-day trial, no credit card required. Click on that. Brings you here to eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit that send button, you'll be sent a confirmation link. You must click on that link, okay? If you don't click the link, we don't know that you took the free trial. So you got to click on that link, all right? Once you do that, you'll be sent all the information you need to get into the live training room. All right, now Bitcoin 57,498. It's trying. All right, with that, we can pass back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am ready. Recap of the recap.
Today it took 7 minutes and 2 trades to get to $110 per contract.
Good job.
Thank you.
Good job. Okay, so now, did you guys roll everything forward? Because I went ahead and rolled all my charts forward.
No, the two things, the Russell and the NQ, were lagging.
Okay.
They're close, but
okay.
They need to bump probably on Monday or maybe tonight.
Okay. Well, I just went ahead and moved all of mine forward so that Sunday night when the alerts start to come out, I'm sure Monday will be I'm sure the M contract will be valid, most likely for all of them. So,
yeah.
Okey-doke. Yeah.
Wait, one more thing before I go. I had mentioned the crude oil and where I thought it wanted to go. 65.90 on the downside, and below that 65.84. Those of you guys who were listening to me, because crude did make the move down.
Here's
and
crude
65.90 first.
30-minute chart.
65.90 and then 65.84. Okay. All right.
I think it
Let me
looks
look
like
at your chart.
You want me to put it on a range chart? I can do that.
No, I can see yours, and that looks about right. Where's your BBC right there? Your BBC, your MA1. All there.
Well, blue and climbing. Yeah, let me do this. All right, so we can see blue and climbing there at about 65.91.
All right, and that's the target that I have right now.
C is at 65.86 on the 30-minute.
That all plays right into the target areas of the 4-tick range on the short side right now. So, and this is a perfect example of how to use the larger time frame with the smaller time frame. Larger time frame we see is trying to get down there to those levels, and the smaller time frame you can take the trades on the way down, because it set them up right now. One at the BBC and one at the MA1 target areas.
Those two indicators, which you'll see on all of our charts, the green line, BBC stands for bull bear cross. When price crosses above it, we're bullish. We look for higher prices. And then once price crosses below it, and you'll notice all these candles here, they were consolidating at the BBC. But the first candle that actually closed below it was this one. So now, on this 30-minute chart, I am looking for lower prices, and price came right down to the weekly trading zone at 65.50/55, and that still hasn't sorted out yet. 65.50, and so when price drops to a weekly trading zone, we expect that to be good support, and it was. We came down, we spiked it, but before the 30-minute candle finished, before the time period was up, Buyers had pushed it back up to close well above the weekly trading zone. And then the next zone above that this week, we had some very wide zones this week. The next zone overhead is way up at 67.25. Is that right? 65.50 to 67.25. Yes, it is. And then when we, prior to that, the zone was 64.70/75. And so we consolidated. Only three things happen at a weekly trading zone. The most likely thing to happen is this: consolidation. That's where the market makes up its mind. Are there enough buyers to keep taking it higher? Or are there more sellers in the order flow, like there was over here, and takes us back down? Now, so only three things happen at a zone. Consolidation, most likely. That's consolidation because, again, these are 30-minute candles. So in a 30-minute candle, you've got 6 5-minute candles. So this would be, if you're running a 5-minute chart, you'd have 12 candles here consolidating at the zone. And then price goes from the zone up to the zone, back down to the zone, back up to the zone, back down to the zone, and back up to the zone. And from 64.70 to 65.50, that's 80 cents. And crude oil pays $10 a tick, or $10 a penny. So that would be, if you were attempting to trade zone to zone, that's $800 up, almost 800 back down, and then 800 back up, and then back down, and then back up again. That's based on just one contract. Okie doke. Now, along with what Michael does every morning in the live training room, which is teach you our methodology and our strategy and how to read the indicators, all of the rules and everything that goes along with it. We also send you around the clock, 24/7, alerts. And those alerts represent windows of opportunity in the market as found on a 30-minute chart. All of the logic alerts and the concierge alerts are based on the 30-minute chart. And so as these windows of opportunity present themselves, we send out the logic alert. Could be 2 a.m., could be 2 p.m. We have traders around the world, so our day session is their night session and vice versa. So far this week, since the markets opened Sunday night at 6 p.m. Eastern, remember, most traders are waiting for Monday morning, 9:30 a.m. Eastern, for Wall Street to open. But lots happens on the Globex. Globex used to be like a shadow market. It's always been there, but nobody really paid it much attention. All the big decisions, big moves started and ended during the Wall Street session. That's not the case anymore. And I'll show you a very dramatic example of that when we go to the daily chart. Now, so far this week, we've issued a total of 98 alerts, 22 never triggered. We're all caught up, not waiting on anything. That gave us 76 actionable alerts for the week, which 11 were stopped out. That's 14% of actionable alerts. Now, a typical week will be 20%. Okay. Now, in the room, Michael teaches you that you always have to have a hard stop loss in place. If you don't have a hard stop, a hard physical stop, not a mental stop, but a physical stop, then you're not trading, you're gambling. And our goal is to teach you how to trade, not to gamble. Okay? So you must have a hard stop in place. To keep things simple, as you're learning the strategy, we use, number one, a fast time frame, so you get to see a lot of trade setups. And we use an 8-tick hard stop on everything. On every market, 8-tick hard stop across the board. On the larger time frame, on the alerts, on the 30-minute, we use market structure to place our stop. The maximum that we want to risk on any alert, $300 maximum risk, less when possible, based on market structure and a simple 3-step method that we teach all of our traders. Okay, so 300 maximum, less when possible, based on market structure. Now, every now and then there'll be an alert that has the final trade to target will be less than $300. You know, on those instances, you never want to risk more than what the potential profit is. Now, every alert will have a final trade to target. If it's a long alert, it will be the weekly zone above. If it's a short alert, it will be the weekly zone below. And so, let's say we had an alert that only had 2 points available. On that alert, you've got to use market structure to risk no more than $200 or $100 per contract per trade. So most of the alerts from the entry, you have an initial target, second target, third target, fourth target, final target. There'll be more than $300 of potential profit in each of those alerts. And we'll scroll through some of them here, just so if you're new, you get an idea what they look like. And here we go. So start at the bottom and scroll up. Okay, the last alert issued was last night. It was alert number 6,847. We actually issued this alert during the workshop. The time you see here is Mountain Standard. This weekend, when the rest of the world goes on, or the rest of the United States goes on daylight savings time, we don't. Arizona does not do daylight savings time. So 4 months out of the year, I'm on Mountain Standard Time as God intended. The other 8 months of the year, I'm on Pacific Time. So right now the Wall Street Open for me is 7:30 a.m. or it was today. Come Monday, the Wall Street Open is 6:30 a.m. for me, because again, I'll be trading on or living on West Coast time. So last night during the workshop, we had an alert on the NQ. It's alert number 6,847. Over the last 137 weeks, I think it is, since we launched Logic 247, this is how many alerts we've issued. And so the alert was to be short the NQ at 12,980, initial target 12,970, potential support or target number 2, potential support target number 3, potential support target number 4, and the final trade to target 12,825 / 12,826. So I'll pause right here and I'll just bring up the NQ chart. Okay. And so again, the entry was to be short 12,980. 12,980 is right here. Here, let me just draw a line. There we go. Did we find it? 12,980. Come on. All right. So, okay, so this was a logic alert to sell 12,980. Now the initial target on every alert, the initial target for the S&P, it's 2 points. For crude or gold, it's 10 ticks. The idea is that the initial target is worth $100. Okay. On the NQ, because of its volatility, it's $200. So as you can see here, from 12,980 to the initial target at 970, that's 10 points at $20 a point. So that's $200 per contract traded. Now, the second target was 12,952. And for those of you that missed the workshop last night, we went through this together. I actually put this alert out live in real time, and I typed it in, and everybody got a chance to see how it went together. And then the third target was 12,932. So if you missed that last night, I think it's probably worthwhile to take a look. 12,932, and then 12,922. Go. Okay. And then the final trade to target was the weekly trading zone below 12,825/826. Okay. So from the entry, which was 12,980. I'll whip out my calculator, make sure I get it right. 12,980 minus the final trade to target, 12,826. That's 154 points. The NQ pays $20 a point, so that's $3,080 per contract traded. So do any of the members who were in the members only meeting last night who took that trade, that bell's for you. Okay. Now, once you've earned the right to trade 2 contracts, that same move would be worth $6,000. Obviously, once you earn the right to trade 10 contracts, then that same move would be worth 30 grand. However, the last thing in the world you want to do when you become a member is to jump in there, start trading the alerts with real money. Okay, that's not the way our program works. When you start with us, we want you trading right away, following along with Michael, trading the alerts, but we want you trading it in the demo account in the simulator, okay, because you're learning the strategy. Okay, now you also get what's called a 24/20 blueprint. That blueprint walks you through the process of writing your business plan, your trading plan, and it also shows you how to get ready to go live. What you want to do, trading in your simulator, you want to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, 10 consecutive days in a row, the blueprint will give you the green light to go live with your second contract. Now, that's a big deal because the first contract, the money to fund that contract came out of your pocket. The second contract comes out of the profits you earned trading one contract. The blueprint will notify you when it's time to add contract number 3, number 4, number 5, etc. You only add one contract at a time when it's time, and you only add additional contracts with profit you earned in the market. If the blueprint tells you it's time to add contract number 3, 4, 5, 15, whatever, if you don't have profit available in your account to add that additional contract with, then you need to halt. You need to come out of the live account, go back into the demo account, immediately book a one-on-one mentoring session with me or Michael or Val or Bert or somebody, so that we can walk through your trades with you to see what happened. Okay? Is it something you missed in the strategy? Was it just that the market conditions were not suitable for trading at that time? Now, our indicators do a good job of not only putting you into high probability, low risk trade opportunities. Once you learn how to read them, they do a pretty good job of keeping you out of trades that are not, or market conditions that are not conducive for trading. So this is a very nice example from 12,980 to the final trade to target. Once we hit that target, once we hit the zone, when price drops, when price rallies up to a zone, we expect it to be good resistance, and when price comes down to a zone, we expect it to be good support. And so when we hit this support, price bounced up to the BBC, bull bear cross. Okay. When we approach the BBC from below, we expect it to be resistance. And it was. It sent price back down to the zone, which we expect to be support, which then sent us back up to the BBC, which we expect to be resistance, and it was. This time we spiked below the weekly trading zone. Buyers came in, took us back above the zone, got us back above the BBC. Now, why here? Why here? Why do buyers come in here? Why do they come in here? Well, the last bullish cross was right here. And if we draw a little rectangle across, okay, when you have a bullish cross that leads to an extended move, which this certainly was, zone almost to the zone, got a leg, a retracement, and a leg, right? So that's a nice extended move. When price revisits the area, the important price, important area where the bullish cross took place, we expect that to be good support. And it was. Now, we have had a bearish cross that led to an extended move. So if buyers are able to rally this thing back up, we will expect that to be good resistance, just like this was good support. This process repeats itself over and over again and again. Okay? So, on the NQ, at $20 a point, from the entry to the final trade to target, $3,000 per contract. Now, if you did not get out at the final trade to target, and sometimes price will just rip right through the final target like it's not even there. That happens. If you did not get out at the final target, if you thought, hey, maybe it can, maybe it can drop to here, to this support area, we have what's called an exit signal. You'll notice on the way down, the step line was on the left side of red and falling. The black line is called the step line. And on a short move, extended short move, it will be on the left side. And then as the move runs out of steam, price will start to walk sideways. And the step line will go from the left side to the right side of red and fallen. What we're looking for on a short trade is the first green candle that closes above the step line after the step line crosses over. Right there. So the closing price of that candle, 12,816 and a quarter. Okay. All right. So that was a good example. Previous to that, we had a long on the Dow, which red X stop out. If you use 32,500 stop, then you reach the final target, and the 32,592 swing high. So a red X means stopped out. thumbs up means got to the target. When you see Z's, that means it never triggered. In other words, we had an alert in the channel, this one, to be long, 39.48, etc., etc. Now, down here, your additional targets are potential support because it's a short. On a long trade, you've got your initial target, that's 2 points, $100 per contract, and then potential resistance, second target, third target, fourth target, final trade to target. Price never rallied up to trigger at 39.48. These alerts have time built in for you to, when you hear the alarm go off on your phone, your tablet, your PC, or your Mac, it's not an alert to fall over your own feet trying to get to the computer to place a trade. It's a call for you to go to your chart and see the window of opportunity. Understand why the entry's here, why the target's here, all of that, okay? And then trade it in the simulator or the demo account to help you learn the strategy. Now, the goal here is not to just give you alerts that you can trade for a profit, which you can, but the real mission is to teach you how to find these windows of opportunity yourself, how to see the opportunity on the chart as it develops. You want to get to the point where you're never dependent upon anyone to tell you when to get in and when to get out. This is your trading business. You're going to be the one to have to ultimately make the decisions. So Michael teaches you 2 hours every morning, every trading day, the strategy. You've got alerts coming at you around the clock so that you can go practice what you've learned. And this is what the whole week looks like. I won't pause to chart out each one of these because there's 98 of them, I think, this week. Okay. But the format's always the same. Alert number 6,840. This was to be long the S&P at 39.48. Blah blah. Second target, third target, fourth target. Okay. No trigger, no trigger. This was a long on silver. This was a long on gold. Stop out here on crude oil. Long on the Dow. Long on the S&P. Long on the NQ. Long on the Russell. Stop out on the S&P. Remember, the stop is based on a maximum risk of $300 per contract per trade, less when possible, based on market structure and the three-step method that we teach you. Now, most alerts, once triggered, will trigger multiple times. We see it almost every day. Now, on days where there's a strong directional move, an alert might only trigger once, but in most cases it's going to trigger, run to the initial target, maybe a little further, and then it's going to come back to that entry, trigger a second time, maybe a third time. Some days we see one alert trigger 4, 5, 6, 7, even more times. Just depends upon market conditions. Thumbs up, found the target. Z's, no trigger. And this is the entire week. Now we have another type of alert. It's called the concierge trade alert. Okay. Now the concierge trade alerts, that's different in that it doesn't come out around the clock 24/7. The concierge alerts are published once per session, shortly after the Globex Open each evening, and those numbers are forward guidance for the entire session. So this is where our week started, week number 136 this week that we're wrapping up today. Coming out of the gate, we had a long on the S&P that did not trigger, long on the Dow, long on the Russell, long on the NQ, stop out on crude, and then we had a short on gold. And Sunday nights we often see gaps when the market opens. Stocks gap almost every day. Some gap up, some gap down. But because futures trade around the clock, really, occasionally in earnings season, we'll see some gaps, but for the most part, it's Sunday night because the market has been closed for a day and a half. So there's a little pent-up energy there. Now, with the index futures, S&P, Dow, Russell, and Q, those gaps fill almost always. Sometimes it will take a day or two for the gap to fill. I think we had an example of that last week or the week before. But by and large, when you have that gap on Sunday night on the index futures, those gaps will close typically in the first couple of hours. Sometimes it might take till later in the session, but it's a very high probability trade setup. As you can see, the gap fill trade on the S&P did it. We had a Dow gap fill, Russell gap fill, NQ gap fill, crude gap fill, and then I've already scrolled through all the others. So that puts in context what I already showed you for the week. We're looking at a total of 98 alerts, 22 never triggered, all caught up, 76 actionable, 14% of actionable stopped out based on a maximum $300 risk. Now, the concierge trade alerts, let me show you what those look like. They look like this. Remember, this is a static report. Last night I got them out 15 minutes after the Globex open. There's two numbers for each market. So once this is posted, you should go to your chart and put two lines in the sand for the markets you trade. In the case of the S&P last night, you would want to draw a line at 39.69 and a number at 39.09. As price starts to move up towards 39.69, that's bullish. So you're using the strategy that Michael teaches you to find long opportunities and the logic alerts that are coming out around the clock, okay, to take long positions, long trades. Once we get to 39.69, that's a decision point for the market. Often price will grind to a halt right there and reverse. If price trades through 39.69, then above 39.69, we're only looking for long trades. The short side, 39.09, once this is posted, if price starts dropping towards 39.09, that's bearish. So then you're using our strategy and the logic alerts and what Michael teaches you in the morning to find short opportunities down to 39.09, and again at 39.09 price could grind to a halt, reverse, go the other direction. If it gets below 39.09, and below 39.09 we're only looking for shorting opportunities. Okay, all right, so let's go to a daily chart of the S&P and get our bearings where we are right now in the grand scheme of things. Yesterday was a very interesting day. This is the all-time historic intraday high, 39.59 and a quarter. The all-time historic closing high was 39.50 and a half. Now, this little green candle, this was President's Day. Wall Street was closed, yet the S&P 500 E-mini Futures put in a new all-time historic closing high. That's a big deal. That shows you that we really do have global markets now. That what happens in the markets is not just driven by what happens on Wall Street. Wall Street was closed this day, the following day. And if you missed the show on February the 16th, we talked about this bearish engulfing candle, okay, and then we talked, of course, about it some more on this day. a bearish engulfing in the proper context, and it doesn't get any better than a daily chart with all these green candles. That's perfect context. Bearish engulfing is a candlestick signal for a reversal. Okay, this candle had a higher high and a lower low than the previous day. And so you'll hear us talking on this day and this day and this day about retracement that's underway based upon the bearish engulfing. And so it took us down to the 24% fib, and we bounced and we bounced. Then once we got below it at the BBC, we found support, which is what we expect. Now price traded. Look how far price dropped on that day. All the way down to the 50% fib retracement of the last leg up. We bounced off that 50% fib and closed just above the BBC. When the next session opened, we rallied all the way up to red and falling. This indicator is called the CFMA1. I refer to it as blue and climbing, that's bullish, red and falling, that's bearish. So we hit red and falling, and that takes us all the way down to that 50% fib again. We bounced off of it this day and this day and this day, right? And when the market finds support, it goes and looks for resistance. And when it finds resistance, it goes and looks for support. And then support sends it looking for resistance. Price flows on a daily chart the same way it flows on a 1-minute chart. Price flows on an S&P chart the same way it flows on a pork belly chart. From support to resistance, back to support, back to resistance, back to support. It's a never-ending cycle. Now, the weekly trading zones, which we publish every Monday morning at 6:15 a.m. Eastern, we've published them since December 14th of 2009. Once our traders get those on their charts first thing Monday morning, that becomes fixed support and resistance for the entire week. The indicators are dynamic support and resistance. Now we'll go to the 30-minute chart. So where are we right now? Okay, we're in Never Never Land. Nobody knows what's going to happen next. Ever. People that tell you they know the future, they're pulling your leg, because that's not how God created the universe. So since we can't know the future with certainty, no one can, not man nor machine, what we can know is what the next high probability move is. So we opened last night right here. We attempted to go higher. We failed. And then we came down to the step line, which we expect to be good support when price drops to it. We also dropped to the 38% Fibonacci price extension. Okay, and so price bounced. This was a big red candle all the way down to the step line. Buyers came in, drove it back up. Now, if buyers could keep pushing this thing up to the open last night, and then a little more, that would become a green candle. Okay. In fact, when we opened last night, we rallied up. There was a little green candle, but it failed. And then we had a big red candle all the way down. Buyers came in on cue and have driven it back up this far. So, just as this was in, let's see, what was the low of this day? 38.93. The low of this day was 39.10. So 38.93. Yeah. So this is an inside day. Okay. I call this bearish engulfing. It's also an outside day. So far today we have an inside day, and what that means is it's the reverse of this. Today's high is lower than yesterday's high. And today's high is lower than yesterday's high. Today's low is higher than yesterday's low. Inside day. That's indecision, okay? Last night, early going, we just had a little tiny candle. a little doji. Now, the really interesting part was on the day the big retracement came that took us all the way down here. Okay, it started here, took us all the way here. That high was 59.25. It looked, now yesterday this was a big green candle heading into the close. Things changed. We were 3 ticks away. See the high here, 39.58.5. The high here, 39.59.25. We came within 3 ticks of matching it. We came within 4 ticks of having a new all-time historic intraday high. But it didn't happen. Now, here's the big question. Why did we stop at 39.58.50? You'll hear a million different reasons out on the street, but the truth is 39.58.5 was the high because nobody, not one trader, not retail trader, not institutional trader, nobody was willing to pay 39.58.75. Why? I can't answer that question. I could possibly tell you why I might not have been, had I been trading at that moment in time, but I never trade right at an all-time historic high. But the collective mind, just like a school of fish, you've seen them, they turn left, they turn right, there's no turn signals, they just do it, right? Buyers stopped buying at 39.58.5. Now, it takes financial commitment for price to rise. But for price to drop, it takes no financial commitment. What happens, though, is when buyers stop buying, sellers come out of the woodwork. Just like on this day, nobody was willing to pay 39.59.5, which led to all this. Right now, it's just indecision. Buyers could come in. We could end this session with an all-time historic new high. But as long as we've got this red body on the daily, then even though we've rallied up, sellers have the ball. Okay? And markets have a tendency to drop a lot faster than they climb. So if price starts to drop, okay, the low of today, 39.10.25, and then we've got this 38% Fibonacci price extension, which price has bounced off so many times on the daily here. That's potential support. The low of the session, 39.10.25. The next area for support, 39.05. And then below that, you've got the 24% fib retracement from this low to this high. In fact, yesterday, the case for the bulls was so convincing that I said probably tomorrow I'll have to adjust the fibs because we'll have a new all-time historic high. And instead of using this as the last leg up, we will begin using this as the last leg up to draw our fibs. But we can't change that until that swing high is taken out. Now, the swing low of this leg, this will become the swing low, and we'll draw it up to whatever the new all-time historic high is, whether it's intraday or closing, whatever's the highest number. I thought we'd be doing that today, but we didn't. So, inside day, indecision came within 4 ticks or 1 point on the S&P of putting in a new all-time historic high. Didn't happen. So all the world is watching who's going to move first. And again, I don't know the future. We don't try to convince you we know the future. But we do know with great certainty what the next high probability move is. And as you just saw from the recap I showed you, 20% of the time, the market will do something other than the next high probability thing. So let's go to the 30-minute chart of the S&P. We've already covered the NQ. Let's go to the S&P. Okay, the yellow lines are previous weekly zones. They're still on the chart because they have been important in this week's trading. Now, weekly trading zones come out on Monday morning, but they still have some sway over the market Sunday. Well, of course, Sunday night we're using those to trade with, and then Monday, and usually by Tuesday, Wednesday, the old zones fall away, the new zones really kick in and take hold, but there'll be occasions when the previous weekly zones still hold sway over the market. I mean, today's the 12th Friday, this is the 11th Thursday. This weekly zone here, as you can see, look how price first it got rejected, then it consolidated. Only three things happen at a zone. Consolidation is the most likely. That's 75% of the time. Rejection, second most likely. Third and least likely is the slice. That's when price slices through a zone like it's not even there. That happens 5-10% of the time. And what typically happens is when price slices through a zone, usually within a couple candles, it will retrace back to the zone that it sliced through, consolidate, and then continue in the direction of the slice. That did not unfold in a typical way this time. 20% of the time, the market does not do the next high probability thing. Okay, so we opened last night this vertical line that represents, see, this is where the line is, that is the open. In fact, I think I'll do it, let me scoot it, there we go. So this candle was the first candle last night. We had red and falling overhead, so we know that's potential resistance. The price managed to get above red and falling, but this was like some iron curtain up here. Price struggled to get through that resistance. It tried and it tried. It backed up, got a running start, and it tried. Could not get through there. Now, on the concierge trade alerts, this is the static report, which is forward guidance for the entire session. 39.69. It's pretty dramatic, but oh, you know what? Glad I caught that. These were for the H contract because we didn't roll over until today. So that it makes sense, let me just put this chart on the H contract, which was still fully tradable today. Now, same price, okay, you see it, the same pattern, that was still resistance, but this is the H contract. I've officially rolled to the M. Any alerts that I might put out today and everything I put out Sunday night as far as the indices go will be for the M contract. So 39.69 still up here. That was the important price, important area to the upside. 39.69. The short side was 39.09. We never touched it. Now, when price is not able to reach either one, you know that you're in something like this. Go to your daily, it's probably an inside day. There's a lot of indecision between buyers and sellers. There's no real commitment in the market. Okay. So now if we back up to yesterday, the concierge trade alert was to be long 39.20. So we had a nice move from 39.20 up to the zone. And then we got back below the trigger. Triggered again. Now, not all triggers are created equal. This trigger was accompanied by blue and climbing. That's what we want. Then price got back below the trigger. Triggered again. But this time you got red and falling overhead. So if you're going to take this trigger, you got to expect that when price gets to red and falling, you're going to have resistance. So we had 1 trigger, 2 trigger, 3 triggers. Actually, you could argue 4. Okay, but you want to see price get above these swing highs, or you got to keep the trade on a very short leash, because as this starts to rally, these highs can be potential resistance, these highs, and then you're at the zone. Okay, scroll back other day. All right, previous day the CTA was to be long 38.94. So we triggered once, back below the trigger, triggered twice, back below the trigger. Let's see, there's once, there's twice, there's 3 times, 4 times, and then even right here 5 times. You have 5 triggers off 1 alert. That's very common, nothing unusual about that at all. It's only on very strong directional days, which today isn't, that we'll see alerts trigger only 1 time. And days where the CTA number doesn't get touched, that tells you there's not much conviction in the market, because we weren't able to reach either one of those. Now, let me go ahead and change this back to the M so that I don't forget Sunday night when I start sending out alerts. Okay. All right. So now go to the Dow. And I'll put this back on the H for a minute. Okay. All right, on the Dow, 32,570. There's 32,570. Okay, so the first trigger took us up to 32,592. So that's 22 points, $5 a point, $110 per contract traded. Then price gets back below the trigger, triggers again. Now this time it took us up from 70 to 86, so that's 16 points at $5 a point. Okay, and then price pulls back to the BBC. Remember, when price pulls back to the BBC, we expect it to be good support until proven otherwise. Like here, see how price closed below the BBC, and once this swing low was taken out, then you had a window of opportunity down to bullish cross, extended move, price comes back to the area, we expect it to be good support until proven otherwise, and it was. And so on the 1, 2, 3rd trigger, took us up to a swing high of 675. So from 32,570 to 675, that's basically 100 points at $5 a point. That's $500 per contract traded. The short side on the Dow last night was 32,440. 32,440. We dropped right into that area that we would expect to be good support. The low was 32,389. So that's basically 50 points at $5 a point, $250 per contract traded. And then price rallies back up. We hit that important price, important area. Resistance is what it becomes in this case, really. Pull back to the BBC. Support. Off we go. Now, if we wanted to put out an alert right now, we could do that on the Dow. So we have something in the hopper. This would be alert number 6848. 6848. YMH21. We want to be long 32,690. And the target would be 32,710. And then potential resistance 32,720. And then potential resistance 32,820. And then the next weekly trading zone overhead, the highest weekly trading zone this week would be 33,110/33,115. Okay. And so entry 32,690, initial target, which 20 points, $5 a point, $100 per contract traded. Second target, third target, final trade to target. Now let me copy that over into the trial channel. There we go. Okay, so now we go back to the CTAs. If you didn't grab a screenshot the first time, here it is again if you want to grab one. Okay. Next on the list is the Russell. Now remember, the CTAs are forward guidance for the entire session. You've got logic alerts coming out around the clock. Long side for the Russell last night was 23.45. Okay. So again, sometimes the CTA will be like an iron curtain, right? Price is rallying nice. Leg, retrace, leg, and then it just turns on a dime. We actually get a bearish cross. The price gets back above the BBC. This time we rally up, and the trigger was 23.45. The swing high was 23.47. So it did make 2 points available. But really, what you should be viewing this as at this point, remember this is forward guidance for the entire session. You got like that iron curtain, there's resistance there. Okay. Now, if the bulls come in and can push this thing and take out that swing high, then to the upside, the next weekly trading zone, the highest weekly trading zone for this week is 23.85. There we go, 23.85. Below that is 22.71. So were we to catch a nice rally this afternoon, we would trade it a little something like this. Get back to my alerts. Here we go. This will be alert number 6849, RTYH21. Moving along, 2350. I want the market to prove itself. I want to see that it's committed, not just to take out. What we've already seen is acted as good resistance. So 2350. Initial target 2352. And if I look left, yeah, got nothing to look at. So I'm going to use some calculations I used yesterday on the show. So the next potential resistance be 2358, and then the weekly trading zone at 2385/2386. And there we go. Okay. And so there we go. 2350 to 2352 initial target, second target 2358, final trade to target 2385.86. That's the highest weekly trading zone this week for the Russell, and that's the highest weekly trading zone this week for the Dow. Okay, so now we'll go back to the CTAs. Next on the list is crude oil. Oh, you know what I failed to do? I just did that on the M contract. So, because we've rolled, I'm just going to leave that alert I put out on the Russell. Now, problem is what did I do on the Dow? Let me go back and look. I put the Dow out as the H contract. And that's okay. I was using this. There's still plenty of volume. 1,200 contracts in the last 30 minutes. So there's still, so the Dow alert is valid that I put in the channel. Now, because I did the Russell on the M contract, I'm just going to, in the channel, I'm going to make that RTYM21 in both the alert on both the trial channel and in the regular channel. RTYM21. Okay. So the two alerts I just put out, the Dow's on the H contract, Russell's on the M. Okay? Alright. So now we go to crude oil, which we aren't rolling today. And we're on the J contract there. So last night's number for crude was to be long 66.30. Never touched the swing high, 66.24. Okay, so There was not enough commitment among buyers to take us through that important price, important area. The short side was 65 1/4. On any day that you see any markets, and especially when you see multiple markets unable to reach the CTA, that can be difficult trading. Okay, doesn't mean you can't trade, doesn't mean there won't be trading opportunities, but you want to be careful because we have no real trend here. Now, trend for all the alerts is defined by a 30-minute chart and the BBC. When price is above the BBC, that's bullish. Okay, so we went from zone up to the zone, back down to the zone, up to the zone, down to the zone, back up to the zone. Okay, $800 per contract in each direction. But what I really want you to see is the pullback to the BBC held. It holds more often than it doesn't. Leg, retraced to the BBC, it held. Leg, retraced to the BBC, it held. Big leg, retraced to the BBC, and then consolidation for hours. Then we finally close below the BBC, and that takes us back down to this zone at 65.50, and then above 65.50 we already discussed it, the next zone is way up at 67 1/4. Is there anything I would be interested in trading here? Not really. 65.75 down to 65.75 to 65.65. It's doable, but you see these wicks, every time price came down, it got rejected. It got rejected here and here, 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 here. So everything we put out as an alert, we want that to be the highest probability, lowest risk trade opportunities that we know how to find. Okay? And because I know I can find better than this, I don't want to put that in the channel. Because this time this support just came out of nowhere. Okay, there's not a logical explanation on this chart why support came in here or here, right? I can make a case for this one, so I'm just going to pass. Okay, I don't put an alert out for every opportunity I see, only what I consider to be the best opportunity. Okay, now it may come down and do just exactly what I said, 75 to 65, and I won't moan and groan about, oh, how I missed that, or I should have done that, or look what I left on the table. And you have to learn not to do that either. Okay, because it'll just make you miserable. If price were to get below the zone and take out that swing low, would I be interested in trading this window of opportunity down to the CTA and possibly beyond? Yeah. Maybe 65.35 to 65.25. It's $100. And if there's momentum, I'll stay with it. And if it starts to consolidate, then I will get out. That's if I'm in front of my chart. When price gets down here, if price gets down here, I don't know what will happen next. Neither does anyone else. So from here to here, it is a window, but not a window I want to publish. All right, next on the list, gold. You'll notice we trade everything exactly the same. Everything we teach is fluid across all markets and all time frames. Okay. The CTA for gold was 1741 on the upside. Way up there. We haven't touched it. On the short side, it was, oh, yeah, this is the right chart. 1716. Benny, the difference between FT and PT is if price makes it 60% or more to the initial target, it gets a PT designation, partial target. FT means it reached the target completely. So it has to be 60% or better to qualify for the PT designation. Mike R, for the Logic 247 alerts that haven't triggered, how long do they remain valid? Well, until price moves substantially away, until it starts to look kind of obvious that it's not going to go there. Valerie does all of the recaps, and so she calls that when she thinks it's appropriate to mark it as no trigger. Frederick says, today's ESCTA to sell 3909 triggered multiple times on the M contract. Huh, that's interesting. Let's go back and look at the ES for a minute. This is the M contract, and this is 3909. That's interesting. Thanks for pointing that out, Frederick. It triggered once and twice and 3 times and 4 or 5, yeah, multiple times, you know. However, I just got to be honest and tell you that they were done for the H contract. Now, some people say, well, when the contract rolls, don't you have to change the weekly trading zones? That was a question I had over a decade ago when I first started publishing the weekly zones. But as I watched them week after week, I realized there's something intrinsic in the market there that I don't. Because it's usually only 1 day or at the most 2 days that we're using the old zones with the new contract, and they still hold steady. So thanks for pointing that out, Frederick. I see that now. Okay. Now back to gold. Long above 1741, we never got there. The short side was 1716, which was right here. Oh, I already drew that in, didn't I? Yeah. So from 1716, the final trade to target would have been the zone at 1710.11. So that's $500 per contract traded. But it kept going down to almost made it to the next zone below. So from 1716 to 1696, 20 points, $2,000 per contract traded. But this would have been the final trade to target. Now, just because it's the final trade to target doesn't mean you have to get out of the trade. Because, as in this case, it keeps going. Now, your step line wasn't on the left side the way you want to see it. It had already got on the right side because of this sideways walk here. Okay? But look at price. See how much distance there is here between price and red and falling? That's a good indication that price may continue falling until it starts to walk sideways like it did here. So whether you got out here or stayed in and waited for the exit signal, congratulations. Nice trade. Okay, what do we have left? Silver. Okay. On silver. Short 2602. 26.02. Okay. 2 pennies in silver is $100. So from 26.02 we dropped to 25.96. So that's 6 pennies. So that's $300 per contract traded. So we triggered, we got back above the trigger, we triggered again. Now when silver moves $1 in price, like from $26 to $25, the large contract's worth $5,000 per dollar of movement in price. We went from basically $26 to $25.50, so that's a $2,500 per contract move. Okay, and that covers them all. Now, hang on. Let's go back and take a look. See if anything's happened with the Dow. Now the Dow, that's the one we just put the alert out on. To be long, 32,690, and the swing high so far is 32,695. Okay. $32,710 is the initial target. It's 20 points, $5 a point, $100. Second target, 720. Third target, 820. Final trade 2 target. Now let's see if the Russell has done anything. The Russell trigger is up at 2350, so no, we don't have any trigger there yet. Oh, and we talked last night in the workshop about the NQ. This daily chart, I had put a descending price channel in earlier in the week. We went from the top of the channel to the bottom, back to the top, back to the bottom, back to the top, and we had spiked. And if you didn't catch the workshop last night, when I put out this alert right here, I used the 30-minute chart, of course, step by step. I explained the entry, I explained the target, everything, all of that. But I also said on this daily chart of the NQ, prices popped out of the top. What often happens, there's a name for it. A guy named Vic who's a trader, wrote a book about trading, and this little anomaly, he talks about it, and people started to just call it the Trader Vic. It's when price pops out of a price channel, it will often come back to touch the top of the channel, or if it breaks out the bottom side, it'll come back up to just touch the bottom side of the channel, and then continue in the direction that it broke out. And so you really should watch it, because this was just textbook. I couldn't have expected it to play out any better than it did, because this backed up what we were seeing on the 30-minute. Okay, I always create the alert. I see the alert on the 30-minute chart. The fact that we had this thing happening on the daily chart was just, it gave us added confidence in the trade. And remember, this turned out to be, from the entry to the final target, turned out to be a $3,000 per contract trade. And there it sits right on top. Now it has spiked below it, and as we showed earlier on the 30-minute, see, there was the final trade to target, and it traded below it down to that area of support and sent it back up. Okay, right now we're sitting right on top of that channel on the daily, right there. good stuff. Okay, so I hope you were there last night, but if not, if you remember, you can always go to the workshop video channel and watch it. I think you'll find it helpful. I do. Okay, let us go to our good word for the day. Yesterday we talked, 2 days ago we talked about praying. Yesterday we talked about reading your Bible. Today we'll talk about learning to wait. Now, patience, discipline is something a lot of traders struggle with, I would say. Most traders, until they learn how to be patient and learn to wait. Galatians 6:9 says, at the proper time, we will reap a harvest if we do not give up. Now, that does not mean if you're in a trade that's gone against you, just hang in there and it will come back. No. That's not what that means. Okay? When you trade, you have a hard stop, and if the trade goes against you and it hits your stop, then you're out. Okay? Not so you can moan and groan and lick your wounds, because that's not hygienic, but it frees you up to see the next opportunity in the market. There's no such thing as instant success, either with people or problems. Whether you need to lose 10 pounds or 100 pounds, the weight can only be shed 1 pound at a time. Standing on top of the mountain is a thrill, but you can only get there one step at a time. Nothing great is created suddenly. Almost every significant success in life comes at the end of a long and arduous wait. And unless you accept that truth, you'll give up too soon and settle far short of the success God has in mind for you. The American company Jell-O celebrated its 100th anniversary in 1997. But if the inventor had still been alive, he would probably have taken little comfort in his product's success. In 1897, Pearl Waite wore many hats. He was a construction worker who also experimented in patent medicines, and he went door to door selling his therapies. In the midst of tinkering and experimenting, he hit upon the idea of mixing fruit flavoring with granulated gelatin. His wife promptly named it Jell-O, and Pearl Waite had one more product to peddle. Now, today, we talk about everybody's got a side hustle or a side gig. And people have many, everybody's multitasking. Okay? We're talking about a gentleman back in 1897. He was a construction worker, and his side hustle was experimenting in patent medicines. And then he sold them by going door to door. Needless to say, Pearl Waite was a busy man. Now, unfortunately, the initial sales of his jiggly snack were not as strong as he had hoped. So he ended up selling his rights to Jell-O to Orator Woodward for the paltry sum of $450. Woodward was a savvy businessman. He knew the value of marketing, and within 8 years, he turned a $450 investment into a multi-million-dollar business. Today, not a single relative of pearl weight receives even 1 cent from the 1 million plus boxes of Jell-O that are sold every single day. Wow. So why not? Because weight couldn't wait. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.